Good morning everyone and welcome to this Monday report by Bordier. This week has been dominated by the central banks and their expected rate cuts. The ECB cut rates by 25 basis points, but the Swiss National Bank cut rates by 50 basis points, double, as we think the Swiss National Bank seeks to avoid the surge in the Swiss franc in the event, for example, of instability in Europe or an escalation in the US and China tariff. This week, the US Fed and the Bank of England will announce their decision on their rates with an expected rate cut in the US. Against this backdrop, the dollar strengthened, obviously. This has not prevented the gold from rising, nor oil, despite continued downward revision to 2025 consumption forecasts by different agencies. Sovereign yield rose, mainly due to flow effect, we think, and bonds therefore fell more than equities, which were rescued in the US by the big techs. In terms of asset allocation, we are maintaining our neutral weighting in equities for the rest of the year, with an overweight in the US and an overweight in bonds with a preference for quality companies. In our equity portfolios now, we remain long the Swiss Lonza after a huge outperformance of 50%, as you can see on the chart, over 1 year compared to the European healthcare sector. The new CEO was very convincing in his first strategy presentation last week, and the group is going to become a pure CMDO, meaning an outsourced developer and producer for the major pharma groups in the world, with potential earnings growth of 15 to 20% on a yearly basis for the next few years. Thank you for listening. That's all for today, and see you next week.